Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets companies try to hide in plain sight, maybe a little too much in this one, considering how they're extending their timeline. ESH Acquisition Corp is giving themselves more time to find a company to buy, and as always, we're here to decode what that means for investors and for the company itself. So, what is the big news? ESH Acquisition Corp had their annual meeting on the 3rd of December 2025, and they got shareholder approval for two important things. First, they got the okay to change their charter to give them more time to find and complete a business combination, which is essentially buying another company. Think of it like an extended engagement period before a wedding. But in this case, it is about finding the right match for the acquisition. This company, incorporated in Delaware, is what is known as a Special Purpose Acquisition Company, or SPAC. They go public with the sole purpose of raising money to acquire another business. They have a deadline to do this, and if they don't, they have to give the money back to investors. ESH Acquisition Corp needs more runway, and their shareholders are giving it to them. They're looking to extend the date by which they must complete their initial business combination. This extension can happen in 1-month increments for up to 6 additional months, pushing the deadline from the 16th of December 2025 all the way to the 13th of June 2026. This is clearly a strategic move to avoid having to liquidate and return funds to investors if they haven't found the right deal yet. The vote results for this extension were pretty overwhelming. A whopping 3,550,987 votes were cast in favour, with 0 against and 0 abstentions. It is clear the shareholders are on board with giving management more time to find that perfect acquisition. Alongside the charter amendment, they also got approval to amend their investment management trust agreement. This is basically an agreement with Continental Stock Transfer and Trust Company that governs how the money raised in their IPO is held. This amendment also allows for those extensions, ensuring the trust account can be extended alongside the search for a business combination. Again, the vote was unanimous with 3550987 votes for, 0 against and 0 abstentions. Now, in any company meeting, elections are usually on the agenda. ESH Acquisition Corp's Class B common stock holders approved the election of 7 directors. These directors will serve until the business combination is completed or until their successors are elected. The vote here was 10,000 for and 0 against or abstentions. This indicates stability in leadership as they navigate this crucial period. However, not everyone was happy to wait. In fact, a significant number of Class A shareholders, 526,731 of them, decided to cash out. This means they chose to redeem their shares for the cash they originally invested, plus any earned interest, rather than waiting for the company to find a business to acquire. This is a common move for SPACs when they extend their deadlines, as some investors might be wary of the extended timeline or have other investment opportunities. After these redemptions, the outstanding shares of Class A common stock are around 3.3 million. The majority of these shares, about 2.8 million, are held by the sponsor, which is ESH Acquisition Sponsor LLC. This is typical for SPACs, where insiders hold a significant portion of the shares. The remaining public float is much smaller at around 213,000 shares. This means that while the company has a lot of shares outstanding, the number of shares held by everyday investors who can easily trade them is quite limited. The filing includes a section on forward-looking statements. This is standard practice. They're telling us that anything in the report that talks about the future, like plans, expectations, or beliefs about future events, is based on current assumptions and is subject to risks and uncertainties. Essentially, they're saying that things might not turn out exactly as they expect, which is a good reminder for any investor to be aware of the potential downsides. The actual amendment documents, like the amendment to the Certificate of Incorporation, are listed as exhibits. These are the official legal documents that detail the changes we've been discussing. Exhibit 3.1 is the amendment to their foundational charter, and Exhibit 10.1 is the amendment to their trust agreement. And finally, we have the cover page interactive data file, which is basically the machine-readable format of the filing, making it easier for computers to process the information. So let's break down what this all means. ESH Acquisition Corp is in a race against time to find a company to buy. They've gotten more time, which is good if they believe they're close to a deal. However, the significant number of redemptions suggests that some investors are losing faith or simply want their money back. The fact that the sponsor holds the vast majority of the remaining shares means they have a lot of skin in the game, which could be a positive sign if they're committed to finding a good deal, or potentially a negative if they're just trying to avoid losing their initial investment. The key takeaway here is that ESH Acquisition Corp has bought itself more time, but the clock is still ticking. They'll need to find a suitable business combination soon to avoid disappointing more investors. The market for SPACs has been tough, and many have struggled to find compelling targets. Whether ESH Acquisition Corp can buck that trend remains to be seen. We'll be watching to see what company they eventually decide to merge with, and more importantly, if that acquisition creates real value for shareholders. Alright, that is our breakdown of ESH Acquisition Corp's latest filing. What is your take on these extensions and the redemptions? Do you think they'll find a good deal within the new timeframe? Drop your thoughts in the comments below. If this analysis was valuable, hit and reg that like button really helps us out, and subscribe for more deep dives into corporate filings just like this one. Don't forget to check out our Discord community, linked in the description, for more conversations and insights. Thanks for watching, see you next time.